And now for a closer look at the rollout for the Korean government's second round of relief payments, we're joined today by Professor Shim Myungkyu, Associate Professor of Economics at Yonsei University. Professor Shim, thanks for coming on today.
Thank you for having me.
So some say the relief fund could help boost consumer spending, while others are worried about the growing fiscal burden. What's your take on this policy?
I think the policy can provide some short-term support to the economy, especially as households continue to face higher fuel and living costs due to the prolonged conflict in the Middle East. For lower and middle-income households, these relief payments could help ease some of the immediate financial pressure and support consumption to a certain extent. However, we also need to note the size of the payment. For example, for a single-person household, the payment amounts to roughly 4 to 10% of monthly median income, depending on the amount they receive. So it is probably not large enough to fundamentally change the overall consumption level, but it could still provide meaningful short-term relief for fuel, transportation, and utility costs that households have to pay. And also, at the same time, concerns about the fiscal burden are also understandable. Korea is already facing growing fiscal pressures due to population aging and slow economic growth. So this kind of repeated large-scale cash support measure may raise questions about long-term sustainability of the government budget. So overall, I would describe this policy as a kind of the reasonable short-term stabilization measure, but it should remain temporary and targeted rather than becoming a permanent policy approach.
I see. And that policy is aimed at addressing the economic fallout from the Middle East conflict. And because of that, more broadly, global food prices climbed last month to their highest level in more than 3 years, with vegetable oils particularly high due to the Iran war. So how might this affect consumers in South Korea, and could it also influence the direction of economic policy?
Yeah, the rise in the global food prices is likely to add further pressure to household living costs in Korea, especially because Korea depends heavily on imported food and energy-related inputs. And also, vegetable oil prices have increased sharply due to the Iran war and higher transportation costs. And that can raise the inflation because although the CPI weight of vegetable oils themselves is not exactly large, but the broader food category accounts for roughly 13% of Korea's CPI, and processed food prices are particularly sensitive to increases in vegetable oil and transportation costs. So the impact can spread quite broadly across everyday consumer prices, and the impact is likely to be felt more strongly by lower-income households because food and energy account for a large share of their spending. And also, higher food prices could also complicate the monetary policy. Even if economic growth slows, the Bank of Korea may find it difficult to move toward rate cuts because inflationary pressure can remain elevated because of all the concerns that we discussed.
And in the stock market, it's been less than a week since the KOSPI surpassed 7,000 points, but it's already nearing 8,000 this morning. And some say it could reach 10,000 by the end of the year. What's your take on these forecasts?
Yeah, the recent rally and the KOSPI index certainly reflects improving market sentiment, particularly around semiconductors, AI-related investment, and expectations that the global tech cycle may recover further. Also, expectations for lower global interest rates and strong foreign investment inflows may have also supported the financial market. So in that sense, the recent surge is not entirely disconnected from the fundamentals of the Korean economy. However, I would still be cautious about very aggressive forecasts such as 10,000 by the end of the year. Financial markets often move ahead of the real economy, and when expectations become overly optimistic, volatility can also increase quite quickly. In particular, Korea still faces several uncertainties, including slower domestic growth, geographical risks between Korea and South Korea, and questions about the sustainability of the global tech cycles. So while further upside in the KOSPI index is certainly possible, I think the pace of the recent surge may be difficult to sustain indefinitely. Overall, I would say that investors should focus less on just the numbers and more on whether corporate earnings and productivity improvements can continue to support the valuations over time.
And you mentioned how the current situation is making it harder for the Bank of Korea to move toward a rate cut. And analysts actually say the Bank of Korea could raise key interest rates in the second half of this year and are advising investors to keep more cash on hand and diversify their investment. So in times like these, what should investors be careful about?
I think the key thing investors should be careful about right now is the asset market volatility driven by different uncertain measures. Markets have recently been supported by optimism surrounding semiconductors, AI, and expectations of the global growth, as I discussed earlier. But at the same time, there are still significant risks, including geographical tensions, inflation pressures, and uncertainty about the interest rate by the Bank of Korea, as well as the federal funds rate. So if the Bank of Korea moves toward rate hikes in the second half of the year, borrowing costs could rise and financial conditions may become tighter. And in this kind of environment, I think the general advice of maintaining some liquidity and diversifying investment really makes sense. Holding sufficient cash gives investors more flexibility during the periods of high market volatility, while the diversification helps reduce exposure to risk in any single or any sectors. So, and also at the same time, I would also caution against reacting too strongly to short-term market movements or overly optimistic forecasts.
I see. All right, Professor Shim, thank you so much for your time and insight this morning. We appreciate it.
Thank you.